Hello everyone, welcome to this week's Gig Harbor Market Update. We're going to be talking about falling mortgage rates, we're going to be talking about sellers cutting prices, and of course affordability. So despite those two things are still really unaffordable in the Puget Sound area. So we're going to be looking at how exactly, a new study just came out. So everything of that, we're going to be jumping right in here. So stay tuned and have some fun and grab some coffee. The first thing we're going to talk about is mortgage rates, and great news if you're a buyer, they have been falling. So let's pull it up here. We topped out in October at 8.1% for 30-year fixed. We've now fallen to 7.5. What's on the screen here, I don't know if you can even see it, but it's week-old data. It says 7.83, and we're now at 7.5. So we've fallen at least half a percentage here in mortgage rates, which is great news for buyers who are already struggling with a very expensive mortgage. So that drop represents, a couple $100 a month in savings and interest. So what's happened? Well, the Fed has paused. That pause means that the market is a little bit more confident that this is the highest that interest rates will go, and the risk premium that exists on top of a mortgage is gone down. So despite rates, the Fed rates remaining flat, mortgage rates are falling because of the market saying, hey, we believe this is the top, and we can reduce the risk premium. Anyway, that being said, it's still very expensive to get a mortgage, and we're going to be looking at this article that shows the amount of cash buyers entering the arena is a lot more than it used to be. So let's look at that here. The cracks in the housing market are growing larger as sellers slash prices, Redfin says, but beware the all cash bids. I got some highlights here. We're going to read those. So after more than a year of a deteriorated affordability that's priced out so many would-be buyers, their luck could be reversing as more and more cracks are visibly forming within the housing market. Mortgage rates have dropped from just above 8% to 7.4%. The share of sellers dropping prices is at a record high, and there's an unseasonal uptick in the total number of homes for sale, which is the highest level since the start of the year. According to Redfin, mortgage rate applications, which have been on a steady decline, are even up 3% week over week on the news. So what's behind the cracks? Nearly 7% of home sellers dropped their asking price in the last 4 weeks. Let's just say that. In average, only about half of that lowers their prices. So we have double the amount of people cutting prices than average. Okay. So what's been happening, sellers are taking notice of the buyers pulling back thanks to the interest rates and are lowering their asking price in response. New listings rose 1.5% from a year ago during the 4 weeks ending November 5, just as the second increase. Okay, so that's not okay. Here we go. So higher mortgage rates means all cash buyers. So this is really an interesting equation to this. And what little relief the average buyer might start to see could be usurped by wealthier buyers, with mortgage rates still above 7% after hitting 8% for a short period. Just over a third of home buyers are paying all cash to avoid costly interest payments as of September. That's up from 29.5% a year ago and the highest share in nearly a decade. So, we're getting a lot of cash buyers. In Gig Harbor, we don't have a lot of first-time home buyers coming in Gig Harbor. They tend to have equity from previous houses that they're rolling in. So that's, so we have a lot of 50% down or over or all cash in here. So Gig Harbor is not unique in that regard. So we have a lot of cash coming in. And I think that's it. They're basically saying affluent Americans are the only ones who can avoid the sting of high mortgage rates. Plus, they're spending less on housing and keeping more money in the bank because they're avoiding interest payments. Meanwhile, those who are sidelined by high prices and rates can't afford a home right now, and they're not building wealth from essentially home ownership. The last time all cash purchases were this common was back in 2014, according to Redfin, when affluent buyers and corporate investors were leading the housing market recovery from the subprime mortgage crisis. This is the data that Redfin is drawing from. This in particular is for Tacoma, Washington. We're going to look at the metro areas everywhere here in a second, but let's first look at what Tacoma's going through. Light blue line is this year. So we're currently at 8.5% of listings have had price drops. So it's interesting, but it's also very seasonally correlated, as you can see in 2021. So we're avoiding this. I can take off last year, kind of. That's when interest rates were just spiking and people were like, oh my God, and cutting prices in order to get a buyer. and sell a house for a higher price. So I think 2021 is probably a better correlation. You can put 2020 in there. Even, I don't know. I mean, I wouldn't do that. Let's just do 2021. As you can see, the price cuts here are very seasonal. It looks like there's going to be a pattern. So it looks like we've probably hit the top when it comes to price cuts. But still, that's over 8% of listings. And Gig Harbor, we had in the last week 19 price cuts, and we have 110 houses on the market. So that's about 17% of active listings have had price cuts in Gig Harbor. 17%. Okay, so what does that mean? Let's look at all metro areas. So Tacoma, 8.5 turnaround. But looking at all metro areas, it's still going up. So they might as well hit Tacoma levels of 8%. You know, that's the trajectory is just, you know, that way. So as we can see, then comparing it to last year when people were kind of freaking out, we've hit that point nationally in that freak out zone. So it's really interesting to see this national trend happening. A little different locally, but that's what Redfin is citing for that article. Anyway, going from this price drops, now we're going to roll that into affordability here. Okay, you're probably saying, yes, Christian, I know Seattle is expensive, but hold on, let's get into this article has a lot of little gems in here that we're going to go through, and then we're going to compare it to Gig Harbor. So, title says it, Seattle has the 9th highest cost of living in the U.S. Study finds. See overall, this is the index. Housing, oh, huge. But let's keep going. So what's happening? So Seattle is the 9th out of 269 areas, urban areas analyzed. So I know Gig Harbor is not an urban area, but again, it's just a thought exercise here. So Seattle was indexed at 145, far below Manhattan, okay, which is the index of 227.8, but only slightly behind LA, which has an index of 147.3. So it's interesting that we're pretty much as expensive as Los Angeles. That's an interesting tidbit there. Okay. Groceries and transportation costs were higher in Seattle than in Manhattan, Brooklyn, and LA. And the most expensive category for Seattleites was housing, with a cost index of more than double the national average. The cheapest category in Seattle was utilities, which came in only slightly above average. Okay, now the interesting thing here is, I didn't actually highlight it, is two other cities in the Puget Sound region, Kent and Everett, also ranked among the country's 25 most expensive place to live per this report. So Kent and Everett, I mean, they're not exactly tech headquarters, you know, so it's interesting, those were in the top 25. And I have MLS data for both Kent, Everett, and Seattle and Gig Harbor. So let's look at how Gig Harbor would stack up. So let's look at that real quick. But I also have, I'm going to pull up my email here. Okay, so this is, okay, zoom in here. Seattle, so you got a median home at 888. Median rent, double that of Gig Harbor. The utilities $175 per month, which is about the same as Gig Harbor. Transportation is a little bit more per month. Groceries are a couple cents more per item, and healthcare is a little bit more. But really, I didn't see too much discrepancy between Gig Harbor and Seattle, besides the rent price and a little bit in the home price. I mean, Seattle, I know it's not the nicest area for 888, but it's only $138,000 more to buy an average home in Seattle than an average home in Gig Harbor. So, okay, what I just pulled up on the screen here is our MLS data for Seattle, Gig Harbor, Kent, and Everett. Seattle being the top line, Gig Harbor being in the middle, and then Kent and Everett being in the bottom two. So what's interesting is that Gig Harbor is about in the 50% range between Everett and Seattle. So both Kent and Everett were top 25 in the county. Not that different in terms of cost of living, except for the housing prices. So this means that Gig Harbor should be, if it was an urban area, would be ranked higher than 25. So it'd be in the top 20. I think if you take the average between 9 and 25, it's 17. So Gig Harbor would be ranked 17th most expensive place, cost of living wise, in the country if it was an urban area. So that's just an interesting tidbit I found. That's how affordable this place is. Top 17 in the country. So not very affordable. Anyway, I hope you like this insight. Maybe learned a little something. And I'll see you next week. Thank you for tuning in.